The purpose of this group is to put people in a room together that would normally never be in a room together.
I used to shy away from property manager. I learned that when you get up to a certain number of units.
Wow, that was a good feeling. So I think that was 2012, 2013.
There are investors who are my clients that haven't even bought it yet.
G'day, mate.
G'day, mate. How you doing?
Good, man. So we're gonna wrap up with Steve. What we looking at on time? It was Mill.
Yeah,
got my
we
phone.
roll. We'll
Okay,
do
all
it.
right. Steve, you've been you came down in what 2018?
Yeah, 2018.
Yeah. All right. 2018. So man, so fast forward to where we at now in 2022, because I remember when you just were emailing, just trying to get your mind around the market.
Yeah.
So what was 2022 like for you? What was those lessons learned, and what does the 2023 look like moving forward?
So 2022 was a good year. It was interesting because things were changing. You know, I think something I learned was, you know, what goes down must go up, right? Which is not what you think, but like interest rates, right? We've been having interest rates going down for a very long time, a whole secular thing. And, you know, I like that. I did a lot of BRRRRs in 2021. I was really aggressive on the BRRRR strategy because that interest rate was so low. But obviously in 2022, they started going up. And that just changed a little bit, you know, so I wasn't as aggressive in 2022. So in 2021, I did 15 BRRRRs. In 2022, I did 2. You know, so I did a lot more assignments. I did a few wholesales, flip. But I wasn't BRRRRing as much. So that was a real change from 2022.
Yeah.
Also, I think I learned. Well, you mentioned earlier too. Something I've been learning more recently, more about the DCSR, you know, debt service coverage ratio. So, you know, I built a pretty good portfolio over the last couple of years. You know, using the BRRRR method, I would, you know, buy them. You know, get all my money out. I'd have an infinite cash-on-cash return. I love infinite cash-on-cash returns when you can pull all your money out, still make a profit, and have the asset. So I did a lot of that. But what I've learned with the DCSR, if I look at my overall portfolio, my DCSR is at about 1.1. So that means like I got 10%, you know, after paying all the expenses, debt service, etc., I got 10% spare, which is, you know, you really want 20%. Right, Anitra? So, you know, when I look, so it's good, like my portfolio is awesome. It's gonna, and like the interest rates are low, it does cash flow, like it's an infinite return. But it's made me realize in 2023, I need to build more cash flow. So I'm starting to focus more like multifamily, maybe getting with Jay doing something Baton Rouge deals with you know, high cash flows. So it made me think that I want that cash flow to add to my portfolio, because I bought a bunch. And they're going to do really well. I don't need to do the same. If I do the same thing, I'm just building more of the same portfolio, and I need to change it up a little bit.
Yeah. And remember, these recorded. So for the people that don't know, what's DSCR when you say
debt service coverage ratio? So that basically is it's a measure of how much cushion you have paying your debt service. So it's basically net operating income. So if your income from the year minus your expenses, property management, maintenance, capex, and then how much you have left over to pay debt service. So when it's 1.1, the 1 is the debt service, right? So 0.1 means I've got 10%. So I've got 10% cushion, you know, and you really want about 20%. So it's basically like it's cushion after paying all expenses, all of the property, as well as debt servicing expenses, what's left over.
Yeah. Good. So that's one of the lessons. What's some more lessons from 2022?
Stick to your lane. So, so I, you know, I'm a marketing guy. I'm a sales guy. I'm a like economics, finance guy. I'm not really a property person from a sense of like, I'm not a rehabber. You know, I don't really care about HGTV and stuff. So, you know, I did get a deal and I saw it and I'm like, man, I can wholesale this and make a little, or I can flip it and I can make a lot. And I'm like, yeah, man, I'm gonna flip this. And I knew it too. I'm like, why am I flipping? I don't even know. And then I bought it, and then like the market shifted. Just I saw some stuff over in England, like with the government bonds and stuff. I'm like, man, this economy, I don't like what's going on. I'm like, I don't want to flip it. I'm going to sell it. So, you know, ended up selling it. I lost money. So we're about to close now. So that was a bad buy, and I could have still flipped it, but I sort of freaked out on myself. And it just taught me to stay in my lane. It was a more expensive property. It wasn't really the typical one that I buy. I got a little bit blinded, and like, it's not my lane. I knew it. I should just wholesaled it and moved on.
Yeah. How do you felt when you bought it? Not when you sold it and lost money, but when you bought it, did you kind of have that feeling already?
Yeah, I think I knew, and I mean, again, in that lesson, I didn't really do enough due diligence on it. You know, from I hadn't walked it. I had my inspector walk it and took photos, but I hadn't actually seen it. And I do that a lot. Like, I bought a lot of properties in Australia I haven't seen. I'll have people go take photos for me, and if I'm wholesaling it, like, I don't need to see it. Like I got the photos, I know what it's up. The buyers will walk it. I'll walk it with the buyers. So I get second, third, fourth, fifth opinions on it. Because I didn't wholesale it, like, I didn't walk it with anyone. So you know, I bought that too fast. But there is a theme in that though, right? So I think Clyde said it, you said it, Tyler said it, Ricky said, you all said it actually, like, just taking action and not being afraid to make those mistakes. So, you know, like, I am a person that will take action. You know, I'll never make a mistake I can't afford. You know, I do have other income sources, I have other assets, so I can afford, like, the loss doesn't hurt me so much. So, but I learn, so I'll move fast, and me moving fast, I've made a lot of money by moving fast, being confident, you know, and so occasionally I'll do the same thing and it will fail on me, and that's fine. When you chalk it up, it evens out.
Yeah, perfect.
Well, more than evens out.
And what does 2023 look like?
So 2023, so the high cash flow properties is what I'm looking at personally to balance my portfolio. Definitely from a market perspective, more creative deals. I did a few more creative deals this year, but off a low base. I intend on doing a lot more creative deals. You know, I've been partnering with Courtney Fricky on a bunch of those because she's really good at that. So just the market is turning. You know, I do see we're you know, heading into a recession. I don't know if that's going to be really bad or just shallow, but there's definitely going to be a recession. Which I'm actually happy about because, you know, like, there's opportunities in that, particularly for someone who's, you know, like, looking for off-market discounted properties. So, you know, I'm just looking to get more creative, you know, capitalize on the recession. You know, also I'm thinking of doing some, like, more the private lending, thinking like a banker, like, that's a sort of new concept.
Antone.
Yeah, George Antone. I've told you I'm geeking out. I know Nitra's a big fan of George, and I'm sort of geeking out on some of his stuff right now. So I'm just thinking a balanced portfolio. What I'm doing is working, still keep wholesaling. I'll still keep burring. I'm getting ready. By the way, I didn't do many last year, but I will do them again. And I'm sort of getting ready to get aggressive at some point next year, but I'm just not super aggressive on things I'm keeping now. I'm just more in assignment mode until I feel at time's right for me.
Yeah. That's it for 2023. So still wholesaling. Ricky talked about shrinking his buy box. Is that kind of what you mean? The same thing as far as buying slow on the birds? You being more selective?
Yeah, I'm just just looking, because the interest rates are going up. Ricky said it too. You got to buy lower, right? When you're burring, burrs are awesome. Like I said, I did 15 in 2021. I locked in a whole bunch of 4.25% interest rate, fixed for 30 years. I ain't ever selling that. Like that's awesome, right? But now it's not 4.25%. You know, that number's gone up, and that's fine. I don't care what the number is, like, because this is a lesson, right? The tenants pay the interest. I don't pay the interest. The tenants pay the interest, but you need to make sure the tenants can pay the interest. So as the interest rates have gone up, that's just made it harder to find those deals, and the prices haven't really gone down that much, right? They really haven't gone down. So I'm waiting for that. I'm only, you know, I'm making lower offers, and I'm getting lower price deals from the sellers. You know, I'm offering 65% at ARB now. You know, I used to be 70%. So I'm negotiating harder, and I'm having success with that, because for the sellers, there's less buyers, you know, so they, you know, can either take my number or not. So I'm just being a little more, just making sure the numbers aren't penciling out as much at the higher interest rates. So I'm waiting till the numbers make sense, and when I say waiting, I'm actively speaking to the sellers. I'll make an offer. If they say no, that's cool. I'll follow them up until they sell the property, or until they tell me to get lost. But I'm just taking more time to get those numbers right.
Yeah, gotcha. We got time for questions, or what time is it?
You know what? Let's not do questions, right? Because everyone that spoke here, I think, will be at Gattuso's afterwards. So if you want to ask questions, let's do that at drinks.
One more thing too. So I still want to tell everybody thank you for the donations. That was the idea that we thought we didn't know what was going to happen. We didn't want to come off bad at all, but we do want to always make this free for as long as possible. So those donations help toward paying the camera guy, that help with the YouTube, and those videos go so much further than that I even knew about. So a lot of people are here because they saw a video from a reel, or it got shared here, it got shared there. So the information goes out beyond this room and even this market. So everything that Courtney was talking about, as far as group thinking, as long as we continue to share those videos, that's more and more people that kind of think the same way we do. So that's helpful. The sponsors, Vertical Capital, on top of those donations, that was also helpful. So we definitely want to give a shout out to y'all. Special
Shout out to Dana. I saw you made a donation tonight. I appreciate that. Ronnie made a donation tonight, so we appreciate that.
Yep, thank you very much. So all of that stuff, you can see the direct impact whenever you make those donations and join in on that side, and we put it to use. So the camera, the sound, this space, we make donations to the church for that. So I just want to say thank you. Thank you to everybody. All right?
Awesome.
So we can wrap up with that.